Hi all, it's Nick here. Welcome back to another video, and today I am covering student accommodation, specifically purpose-built student accommodation. Now, this is an asset class or a segment of the UK property investment markets that has been around for years and years. It was very popular from 2012, 13, 14 onwards, and it kind of had a really peak run where you would see all these projects with guaranteed returns, with guaranteed buyback strategies, and the market was, I wouldn't say overrun, but there was a lot of supply. Then it kind of eased up for a number of years, but I have seen a kind of resurgence in the past 2-3 years of these types of products coming to market. So I thought I would do a video on the segment and really help investors understand, what are the advantages and what are the disadvantages, because there are some really key differences between typical residential property investment versus student accommodation investment. So I'm going to go through those in this video today. Now, just to be clear, what I'm referring to is purpose-built student accommodation. I'm not talking about HMOs or houses of multiple occupancy or shared houses or university managed halls of residence. I'm talking about private developers building structures which are catered just towards the rental of students. So typically they can be what we call ensuite apartments, where the tenant or the student will have their own room. They might have a desk in their bathroom, and then they share a kitchen. That's called an ensuite apartment. And then you have studio apartments, which are obviously fully self-contained. So you basically have one room which has your bed, desk, kitchen, and it's like a mini apartment. And then you have your bathroom as well, but it's all self-contained. So you don't have to share any of the kitchen area, etc. So yeah, purpose-built student accommodation, there's a huge amount of it in the UK, and there is massive demand. Okay, now that's both from investors, retail, or what we would call buy-to-let investors, regular, day-to-day people that have a bit of cash and they want to buy something, and then at institutional level as well. So you would be shocked about the level of capital that's being spent across the UK now on university-focused education or purpose-built student accommodation units. So let's get straight into the pros and cons. What I'm going to do is give you 8 of each. So 8 advantages and 8 disadvantages. And remember, this is very much focused on an investor's perspective. So my typical client base, the people that I work with, they're buying off-plan properties in Manchester, Liverpool, Birmingham, London, etc. And they want to understand, look, if I put my money into this, what are the risks, or what's the potential benefit? So they can assess the risk reward profile and make a judgment call. So let's get into it. So advantages of purpose-built student accommodation. Number 1, higher than average rental yields. So you'll typically see guaranteed returns of 7, 8, 9, 10%, which is higher than you'll get in the residential market. Number 2, guaranteed returns. I touched on it then, but these will often be fixed for a certain duration of time. 2 years, 3 years, 5 years, and we just released one which is 10 years. So you can lock in that fixed return and have great peace of mind there. Stress-free and fully managed. So when we mean fully managed, we mean you invest, you become the owner of the property, and then that's it. Okay. Even with residential properties, sometimes you have to change a boiler. Sometimes the property manager will call you and tell you the rent's late, or there's an issue with the deposit, etc. With student accommodation or purpose-built student accommodation, otherwise known as PBSA, it is very much a case of the management company will take care of everything and you won't have to worry too much. So it's very stress-free in that sense. Low ticket price, so you can get into these investments from around, well, there's one on the market at the moment for £50,000, but typically they're around 70, 80,000 up to 150,000, sometimes higher for premium projects. But overall, the ticket price is lower than residential property. Institutional proof of concept. I focused on this earlier, but a great company to look at here would be Unite. I actually used to work for them. They are the largest student developer in the country, a publicly listed company, and they have huge level of investment from global institutions, pension funds, insurance funds, high net worth families, family offices, etc. And look, if these types of people are buying up student assets, you understand that their level of due diligence and research is obviously extremely extensive. So it must be a good asset class. And yeah, that's proof of concept is what I call that. Lower SDLT and furniture included. So there are savings to be made potentially on the stamp duty land tax when purchasing, because it's not classified as a residential asset. So the rates are slightly different. In some cases you don't pay any, and furniture is included. So typically they'll be fully furnished, and yeah, you don't have to buy a furniture pack or anything like that. Next one on my list here, significant tenant demand. So whatever anyone says, the university experience is still not changing. Fees are increasing, demand is going through the roof. The UK education system is famous and globally known as being some of the best in the world. So huge demand from Americans, Canadians, China, Middle East, etc., all still coming to the UK and staying in these premium properties, PBSA developments is what I call them. So yeah, the tenant demand is there. So don't listen to what anyone says about, you know, universities not being as popular as they once were, etc., etc. I can tell you now there is still a mass undersupply of these types of assets, and do some research online. Look at reports from Cushman & Wakefield, JLL, Knight Frank. You can get these very in-depth student accommodation reports that will give you the numbers of the supply and demand imbalance, and make sure you're making a sound decision basically. And lastly, a high-end luxury product. So a lot of these developments, they have cinema rooms, gyms, concierge service, electric keys. Now we're seeing more cinema rooms, co-working, they have social experiences. So it's very much an experience. They're giving that university sense of community, lifestyle to the students, and fundamentally that's what they're paying for the premium. It's not like English first year students that will go into an old rundown halls of residence and party, you know, every night. This is not the case. These are expensive rental apartments. They're high end, they're in premium locations. The parents are putting the students here because they want the security, they want the CCTV, they want the close relationship with the universities. They want to be able to ring the front desk and, you know, ask about their tenant, have you seen them lately, etc., etc. And as I say, I used to work and manage these developments, and I understand what it's like. So that is a huge decision in why the tenant demand is so high, because the parents want to pay that extra, especially if they're coming from overseas, which is often the case in these developments. So that's the advantages. Hopefully that gives you an idea from the investor's perspective in terms of the tenant demand, the institutional proof of concept, the guaranteed returns, the higher than average return, premium product, etc., etc. Now, moving on to the pitfalls. So what are the disadvantages? Why wouldn't someone invest in these? What's the kind of things that you need to give consideration to in making sure that your investment's the right one, basically? So number one, cash only investment. You can't use mortgages, you can't leverage with finance for a couple of reasons. One, lenders don't like guaranteed returns, and two, the size of the apartments. Often they're smaller than 30, 35 square meters, which means most lenders won't go for it. Yes, you can get specialist secure lending, especially if you're buying a self-contained studio apartment or you're buying 4 ensuite apartments like a cluster, but your interest rate is going to be quite significant. It is possible though, but in most cases, there's no lending available. So you have to be prepared to buy with cash outright. Lower appreciation. This is a big one, right? If you buy a student property and then you buy a normal residential property in the same location, same specification, same standard, etc., etc., almost definitely the appreciation rate of the residential property is going to be more than the student property. A number of reasons behind this, but the main one, and this will go on to our next point here, is the resale market. Because it's a cash investment and because it's a more niche asset class compared to a student accommodation, the resale potential, the wideness of the market when you're selling is more limited in comparison to a normal residential property. So you can only sell on to another cash investor. You can't sell on to a mortgage buyer, cash buyer, family, end user, etc., etc. So you can only sell on to a cash investor. So it means it's a bit more limited in the resale market. As a result of that, less people competing for it, the price comes down, the less pressure on the pricing. So yeah, that's one to think about. Less control over tenant selection. Now, it's not a major one for me, this, because every property, you know, you can have wear and tear, but with student accommodation, you're obviously leaving the management of the property to the people that are being paid to manage it. But that does mean that you're relying on them to do checks, references, keep an eye on the property, do their inspections. A lot of these companies, they are very good at doing it, I have to say that, but it's just another element to keep in mind. Higher capital outlay for the deposit level. Now, in most cases, PBSA developments, they're sold off plan and they can be sold with a 50% deposit level. So you might be buying 2 years from the completion, but you still got to put in 50% of the property value as a deposit level and then pay the rest on completion. Whereas if a residential property, that might be 10, 20, 30%. So yeah, the deposit levels during construction are typically higher. Not suitable for short-term investment. This is a big one for me. A lot of agencies will advise investors, look, just buy this, you can sell at any time post-exchange. Yes, in theory you can, but in reality, are you going to? No, because you're probably going to take a hit after you've considered the costs associated, etc., etc. Only, I'll tell you directly now, only buy a student project or purpose-built student accommodation unit if you want to hold it for 3, 5, 10, 15 years. Okay, don't buy it if you want to get in and flip it on completion or sell it after a year, etc. Is it possible? Are you legally allowed? Yes. Do you want to, and is it optimum? No. You buy these assets for long-term income generators to get a 9, 10, 11 and beyond percentage ROI year on year. That's why you're buying them. That's why institutions buy them. So it's not really suitable for short-term investors, more medium to long-term. Increased price per square foot. Look, if you add up if you compare the price per square foot of a student project versus a normal residential project, they're going to be worlds apart. You are going to be paying an enormous price per square foot for a student property because it's a premium. You're buying all the facilities, all the on-site amenities. And does that really matter? Not really, because as long as you're holding it for a long enough duration of time where you can build up a bit of equity in the property and then sell it on, then you're going to be fine. But it is a price per square foot. I would encourage you, by the way, just as a bonus tip, don't measure these the same way you don't assess these the same way you assess a residential property. If you're buying a resi property, you're going to look at the view, you're going to look at the size, you're going to look at the price per square foot. It's obsolete. Obsolete. It's irrelevant. It's probably a better word when you're buying student investments. Student investments, you want to look at the location, the specification of the scheme, and the yield and the long-term ability for that yield to increase in relation to the demand in their area. So yeah, they're the kind of things that you want to assess. And then lastly, just the risk, because I touched on this earlier, but because you're putting out more capital on the exchange of contract stage, i.e. your deposit is higher, that does come with a bit more risk in terms of your exposure during that construction build. So as a resi property, you're putting in 10%, a student property, you're putting in 50%. Obviously that's more risk from your perspective. And that's it, guys. So just to recap, cash only investments, low appreciation, more limited resale market, lower control over tenants, higher capital outlay, not suitable for short term, increased price per square foot, and a slightly higher risk during construction. So hopefully that hasn't scared you away. As I say, there are amazing student accommodation projects out there. We've just launched one in Manchester actually, which has a 7% net return for 10 years, 3 minutes from the university, stunning on-site specification, developer with a great track record, really well priced for Manchester, and you lock in that long-term return. So that's an example of a project where you're going to be able to sell it years down the line. You're going to have demand for that on resale because it's a great location, because it's a good spec, etc., etc. And then we've seen other ones lately, which is a 50 grand unit. I won't say the location because it will give it away, but in the northeast region where it's just, I know investors are going to buy into that and they're going to be making very, very little, if any, on capital appreciation, and it is only an 8% return for 2 years. So yeah, you can see there two projects, one vastly different to the other. So keep that in mind. But yeah, that's it for the video, guys. Hopefully that gives you an honest, clear perspective of what to expect from purpose-built student accommodation investment. Any questions, let me know. My details are below. You can visit vertapropertygroup.co.uk. Don't forget to subscribe, and yeah, comment below any questions or drop me a message on nick.hyland@vertapropertygroup.co.uk. And I look forward to speaking to you soon. Thanks, guys.